So I expect to learn a lot today. Immediately to my left, somebody else who doesn't need much introduction, Richard Anderson. He's the CEO of Delta Airlines. And Mitch NICHOLS is the president of UPS Airlines. Bill Flynn is the CEO of Atlas Air Worldwide. John Pattullo is the CEO of CEVA Logistics, and Brian Kelley is the Chief Product Supply Officer at Coca-Cola Refreshments. This industry is crucial to global trade, which is sort of keeping us afloat right now. It's crucial to jobs in various countries. And to start with my whole question about where it's going, let's start right there. And I'm going to start with you, Brian. You are not only involved in the logistics and the cargo side of the business, but you also sell a product that you'd like everybody in the world to buy. Give me your sense of where this is going in the next year or two.
Well, I don't know that we know exactly where it's going. I think what we expect is more of the same. We expect that it's going to continue to be difficult in virtually every way. We expect to have to win in the ways that each of our companies do. By being better, by being smarter. We're going to deal with volatility, we think, that is going to continue. We think we'll deal with complexity that will continue. We'll deal with consumers who are cautious. And that's the way we view it going forward.
I don't see it getting better for the next 3-4 years. I think the levels of sovereign debt and corporate debt are at extraordinary levels. And therefore, I think we'll have a very sluggish economy where, as Brian said, we'll be battling for share in a relatively stable, sluggish economy. With regard to assets, our business model is asset light, so we don't have to take some of the painful forward investment decisions that some of our competitors do.
And from the freight perspective, our narrow view as Atlas is having a modern, fuel-efficient fleet, a fleet that will produce the lowest unit cost to move a product from Hong Kong to Los Angeles, or from Shanghai to Frankfurt. And we are making those investments, and so is UPS, and so is Delta, and all the other key airlines and providers of freight services. And we're making that bet because while there is all the economic turmoil and certainly a high degree of uncertainty that my colleagues here have mentioned, I think our perspective is that air freight is vital. I think Michael Steen mentioned earlier in his opening remarks that while air freight only represents 3% of the weight in terms of total world trade and manufacturing goods, it's about 35–36% of value. And so as we think about that and look at the continued trends in globalization, manufacturing moving from coastal China to interior China, south into Vietnam, serving consumption centers not only in Europe, but in North America, but now increasingly flowing into South America, the intra-BRIC trade, if you will, into parts of the Middle East and resource-rich sub-Saharan Africa. Our bet is air freight remains vital. It's somewhat uncertain in the near term, but it recovers and grows. And when we look at the history of air freight, when we think about the Asian economic crisis, the currency crisis back in '97, then we had the recession in 2001, SARS, through now the Arab Spring. We've always seen these, it's not a smooth straight line upward to the right, but each time air freight recovers and grows, and that's a bet that we're making.
We're not where we want to be, and I think the conversation we were having was in reference to either trade or some of the aspects about that. So we're definitely looking for free trade. We're looking for open markets. We're looking for opportunity. And when we look at the free trade opportunity out there, 90–95% of the population or the consumers are outside of the United States. 70% of the purchasing power is outside of the United States. So when you look at the opportunities, and yet when you look at the 30 million U.S. businesses that we have, only less than 1% actually export. So you have to ask some fundamental questions as to why aren't we more aggressive in that? We need better access to markets, and I think we heard that from Secretary Woodward. I support that. And we as businesses need to think like locals. We need to think more internationally. Certainly if you go into other countries, that is their mindset. They think in global terms. So I think there's tremendous upside, but we have to position ourselves to take advantage of it.
I think generally positive.
You know, it depends upon what region around the world, but the U.S. appears to be a bit stronger than what I think we read about in the paper. Corporate profits are really solid in the U.S. Cash balances are higher than they've ever been in banks and in corporations. U.S. productivity is at all-time highs. The housing markets have bottomed out, and we're still the reserve currency of the world. If you move to China, China always seems like that the dozen or so people that probably run China always seem to be able to figure out how to make their economy run. Europe is obviously in a very difficult situation, but ultimately the euro has got to be a common currency with a single bank, and everybody's got to get on board to print more euros and stand behind the euro depending upon, and I think ultimately they'll get there, but Europe is going to stay choppy, so we pulled a lot of capacity out of Europe. And I think that Mexico is really doing quite well right now. And Brazil is just a question of time. It is of all the BRIC countries, when you think about Brazil, it has good infrastructure by and large. It has good government that doesn't really interfere that much. And it's really a well-run country. So I'm a bit more optimistic with the proviso that Europe is going to stay tough for a while.